Welcome back to Enlightened Trading. My name is Conrad, and today I'll give you an update on most US stocks and indices, or not most of them, but resemblance of most stocks by using indices. And as you can see, this is the S&P 500 ETF Trust. And as you can see, this goes back to, this is the weekly time frame, and this goes back to beyond 2000, the change of the decade. And you can see rather clear how maintaining the 100 weekly moving average was quite critically in the past for maintaining for maintaining uptrends or getting into rather serious downtrends or recessions. Also, we had and you can also draw a trend line here, a very important trend line, which after it breaking, we almost saw immediately very drastic shift to the downside. And yes, these both have been crashes, the .com bubble and the 2008 bank crash. And as you can see, it seems like there is a reoccurring time interval where you have a trend line, it breaks, and then you get a shift to the downside. And this time horizon, this time frame, as you can see, would have matched quite nicely with a 2015 recession. Yet we only had a consolidation around this area, where usually a recession could be expected. Also, we broke the 100 weekly moving average quite significantly. Also closed below it for a few times. We did also break below it right here, yet it was very shortly after an important recession, after a reported recession, and so it was rather unlikely that it's a significant break, and it could be really detrimental. So we are now again around the 100 weekly moving average. We consolidated around it in 2015, where a crash could have been expected. The trend line also broke at that time, and we didn't go above it like we did right here. So what's also interesting is we maintained the uptrend. That's the most interesting in my opinion. We didn't get an important crash, and then crashes yet they usually have fundamental reasons. Yet in chart analysis they can be expected quite soon. So now we have a calling of price action with slowing down of momentum. Also, the trading range is tightening by the day, and you can see quite nicely we have sort of this curving price action coming here into play. This will be very interesting how this is going to play out. We are now in an equilibrium with high, low, lower high, higher low, and about to set the lower high. I think it is most likely that we will set a lower high, or just bounce off of resistance and maybe get into an ascending triangle. And this will be critical how this will form. If this does play out as a usual equilibrium with a symmetrical triangle and a tightening range, then as you can see we also had an equilibrium basically around here and also on the top. This doesn't mean that this is the top. what I want to say is usually when we have such coiling price actions and equilibriums being formed quite tightly, it is important and very significant for future price movements, and this can indicate whether we go on to $500 on the ETF trust, or we go back to 200, 213, or I mean we never retested this area of 160, 170, $157. So this we never retested it, only on this short move. So I mean it is possible. I don't want to be one of these doom and gloom guys and tell you, well, this shit is going to go down. I will not. We have very important resistance on the downside. I mean, support incoming. So I will not be a doom and gloomer and just tell you that, the U.S. Military is so expensive and blah blah, and that is at its highest. Yes, it seems like it is. Markets tend to still go up, even if there is a strong fundamental reason for it not to, like in the dot-com bubble. Emotions kept the market going, despite, just a business having a damn website doesn't make it like $1 million company. Everyone thought it, and even after people realized, it doesn't, people still bought in. So market information, as it can be priced in, doesn't always have to be. So yeah, so that is important. The next couple of weeks and months, and like 2 months, 3 months, depends on how tight we will get, will be quite significant to me. This is basically every index looks very similar. We do have on the daily, you can see a trend line, which seemed like it was respected, and it's now again seemed to have broken, and we now retested that area. Yet the retest is so shortly, and we retested it now 2 times. So this actually 3 times on the daily. So this does have the possibility to break it, since we tested it so many times that it will become a line of least resistance. So we too have here a coiling price action and an equilibrium, like on the other indices. So nothing too important to say, except that we broke this trend line. This could be an important factor in the future. So Russell 2000, I don't have too much TA going around here yet. I know people who say this does look bad, and actually, in my opinion, it doesn't look too bad. We had a very detrimental drop here in the Russell 2000 index, and a V-shaped recovery, and after that, we basically are forming this huge bull flag with, double-digit percentage range. At least it seems like it. Yeah, double digits. So, whilst this is a very, very wide range in which price is resembling or is residing in, it's still in form of a bull flag, with quite, or with lower highs and lower lows, but the distance between these lower lows and these and these lower highs is very small. So what means that if we fall back down and we even make lower lows, we don't we don't excel too far from the past low. So, or rather, because people are still bullish and willing to buy in. So, although we make lower lows, they always get bought up, and so this basically means that there is some buying pressure. Yeah. So looks more bullish to me than bearish, although I wouldn't trade this. I mean, you could very well trade this if you are willing to, because there's a very wide range. But I'll leave that to you. So also bull flag is forming on gold on a daily time frame. We have lower lows and lower highs incoming, and whilst this is a short-term to intermediate downtrend, I think this will change, reset, and in the next weeks, and we get a bull break, maybe even if a break of the major U.S. indices break to the downside, then maybe this will coincide. I won't take this leap of faith. We still can retest the area of 1,000 of basically for $1,450. Yet I think this is sufficient retest around 60. So yeah, I think if we break this resistance line as well as our low highs, we will get quite a fast shift to the upside and come back to the last swing high of $1,550. If we activate our moving averages, then we have the 200-day, and now coming in, the weekly moving averages are picking up, and we are now actually bullish on all moving averages. So the consensus is in that aspect telling you that well, you can be in a bullish trade, or this is a bullish indicator. Yeah, RSI is coming back into not overbought territory, so this also is nice on daily, 3-day, just basically in the middle is what you want to see for a continuation of or for an excel in price action either way. So if I just look quickly at silver, quite similar, just much more far away from our recent swing high, so not as bullish as gold. Also, we have this still is a weekly lower high compared to the last one at $21.18. So this is a bearish sign, and you can see right here, this seems like it's a trend line with basically a sideways movement right here of our bottoms. So yeah, this does look like it wants to go down a bit further and retest our 200 weekly moving average. That would be another most likely scenario, I think. And we can extend that, of course. So, okay. And GDX, Gold Vectors ETF Trust. looks like we are. This is quite interesting. We do have lower lows and lower highs also right here. Yet in a more tight range on the bottom side compared to the tops. So this looks like a falling wedge. I'm not too fond of falling wedges or rising wedges. They can be quite useful in my analysis. Yet I do see them with not as a high percentage point to actually reverse or continue into the direction which was prior or will happen in the future. So I do look at them, of course, and I analyze them and I try to use them. So yeah, I think that's a broader look on commodities and big indices. I think my next video will be around Amazon, Tesla, Apple, Google, and Twitter. Maybe coming in with some Facebook too the next time. Yeah, I think that's it. I hope you have a very nice rest of your evening. And get closer to your weekend. Most likely you will look forward to it. I do will be on some parties actually on Friday and Saturday, so definitely looking forward to that. And my boiler in the night shut down for some reason, and the ventil, how do you call it? The vent. Wait a minute. The valve? Really? Okay. Yeah, and the valve of my boiler, of my heating facility, like shut down, and it seems like it just had to be twisted in a way, and now it's working again. So yeah, definitely happy about that. So I'll see you guys back next time, and hope you have a nice rest of your evening. Good night. Bye.